Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over just that kind of choppiness on the charts where you do see some altcoins starting to pull back, maybe Bitcoin indicating a little bit of a pullback may occur. And guys, this could end up being a big deal, so we are going to cover it in some detail. But before then, let's just remind ourselves that stocks did close a bit in the red, and next week could have some algorithmic sell-offs. So just be careful this next week. It's going to be very dicey, all right? And you may have an expectation of continuation of pumping. And of course, we had a great weekly bullish close on Bitcoin. But, once people get a little bit too enthusiastic, we have to just scrutinize just a little bit more. And so while I am on the bullish side at the moment, I will show you reasons why we should just thoughtfully doubt our position there. And guys, just a reminder that the interest rate decision by Papa Jerome Powell is going to occur on March 22nd, this Wednesday at 2 p.m. Eastern Standard Time. So please understand there could be volatility surrounding this date. And the current expectation of the market is 65% believe that it will be 25 basis points. So that's pretty much what we're looking for. If it's less than that or if it's more than that, markets could get worried either way, and that's a function of stagflation because we are caught between a rock and a hard place between inflation and of course recession narratives. And so really 25 basis points is the sweet spot. Anyone telling you that he should increase it by 75 or 100 basis points, believe me, they are just they haven't thought it fully through, okay? And anyone who is saying they should just do 0 basis points and leave it totally alone, likewise, or even pivot backwards, likewise, they haven't thought it through. Both decisions could actually end up collapsing markets. And so the sweet spot is going to be 25 basis points. And I believe that Powell's goal in this next meeting should be not to rock the boat. If he does rock the boat and either give no increase or a very large increase, such as 50 basis points or above, then that's going to be intentional. He's going to be intentionally trying to bend or even break the market to one direction, and that could send things flying down. Guys, let's go ahead and just jump straight to the chart because we do have some interesting patterns going on here. Of course, in the previous episode, I was telling you, don't worry about that bearish kind of divergence on the 4-hour that people were talking about because we were headed into a weekly close that was looking like it was going to be very bullish. And sure enough, guys, I was telling you we were going to hit $27,000 and $28,000, and bing, bada boom, like guys, we just hit 27,000, and then check it out, 28,500 this afternoon. However, at the daily close, the week also closed, and so it's time for potentially a pullback as a new week is beginning. Okay, that's how this kind of give and take goes. Usually, the blue candle is followed by a red candle, right? And right now we are on the 4-hour chart, and that's because this is the 4-hour pattern that a lot of the talking heads were discussing on crypto Twitter, etc. And so I do want to take it seriously, of course, now that the bullish week has ended and we met that $28,000 target. So let's just go ahead and throw on what I'm seeing, at least, which is this rising wedge and the potential for us to even fall as low as 25,250. We can just kind of say 25,300 if you just like a rounder figure there, or 25,500. But whatever you want to call it, the approximate measured move is in the area of this naked candle over here. And we do have support in that region at around 25,250, which could give us some bounciness there. Now, that's all, fine and well. People may be thinking that they want a better entry, and so they like the idea of this type of pullback. But there are some things that could be set in motion by this, which could be negative for the charts. First of all, I'm going to just throw on those diagonals that we've been talking about, and you can see that we really could end up breaking down from our diagonal parallel channel if we do end up breaking as low as 25,250. So this could be a tease to break down, and maybe this is actually not going to fall that far, and maybe we're going to catch ourselves in this middle area and then put this middle area here and then push our way back up, and just put a little bit of the fear of God into people. But should we break under there or wick under there and then hold under there, we would be at risk of just continuing to fall, that kind of bearish scenario that I was pointing out. And if that happens, then of course we could just end up losing this whole thing and maybe even making a lower low on the charts, and that would probably go with some macro news. So the fact that the measured move of this bearish pattern takes us into that lower depths of this kind of a bottom half of these potential bullish channels that we've been carving out ever since really the end of last year. It's just one of those things that is going to start getting bears very excited and bulls very nervous. And if just a massive profit taking occurs, especially going into the Federal Reserve's decision, then this could be a very real risk. On the charts. So lots of stuff to balance. The shakiness in the markets could actually be good for Bitcoin, but at the same time, you can't just go straight up. You do have to consolidate or do something. So I'm still looking for Bitcoin to potentially just chop out this area, right? Just maybe just scare people, if even that, and then push up to this 30,000, and then potentially flip 30,000, and maybe even get as high as 35,000. But and then we can discuss above there. But at the current moment, we have to understand that there is a possibility that this is a deviation. We get sucked back down into this chart the same way that this kind of stuff happened over here, the same way that this kind of stuff happened over here, and also right here, right? So Bitcoin has a long history of kind of making these, let's just call it what it is, kind of like bear flag patterns. And if this was just a kind of deviation on yet another bear flag pattern, then again we could find our way down to that potentially a $14,000, maybe even $10,000 area. I'm not calling for that, okay? That is not my thesis right now. We haven't broken anything that needs to be broken in order for me to call that. But there are some pretty big ramifications of this drop down to 25,250, and I'm going to get to them in a bit. But because a lot of this diagonal is really trend-based lines, right? These are origin lines that are trend-based. I want to just go a little bit back to our support and resistance on the daily in a little bit more traditional format, the kind that my friend Retta prefers, I think. But these are daily lines. I've just marked the kind of less important ones in a purple, and then the more important ones in yellow, just so we can kind of see the zones that we're dealing with. It's a very clean way of looking at the chart, probably what you're more familiar with on crypto Twitter than my origin lines, but hey, this is my channel, so I can do what I want. And you can see that just on a daily support and resistance basis, and of course this is held for several weeks and months, to be honest. This line here at 25,250, 25,300, you could say, basically in that area. It's such a skinny zone on the macro here that it doesn't really matter what we call it. But essentially, the measured move to retest that area could be quite strong and could hold us up. So I'm not really afraid of it, afraid of us wicking down here, as long as we get some good buy pressure. Okay, as long as we get some good buy pressure off of these former rejection areas, then that's actually something that could be pretty bullish. And like I said in the previous episode, it could just refuel the gas tank and let us go on our way, right? However, again, for reasons related to the 5-day chart, it is going to be important that we do not sit down here. And if we just sit down here or stagnate really under these wicks over here from back in March 15th or 14th rather, then that's going to be very dangerous for us. And I'll show you why in a bit. But before then, let's just go ahead and take a look at our 4-hour chart, pardon me, which will be closing in 30 minutes, I believe. Yeah, it'll be closing in 30 minutes. And so if you're fortunate enough to see this, and this candle has been falling in the time that I was preparing for this video, just by thinking about what I wanted to talk about, we were essentially above the pattern here when I noticed it, but or rather when I decided to make a video about it. As we had lost the 4-hour momentum pool, you can see that we just started to drive down pretty fast. And one thing before I made this video is that we were holding the bullish control zone on the 4-hour, but you'll notice that we have just lost that. So that's not good. Bulls are no longer in control on the 4-hour. Bulls have lost control on the 4-hour, and we are going to have a bias to the downside as long as we're under $28,040. And just to be safe, we should be above the momentum pool around $28,156. Okay, then we could, if this thing just ends up being a fake out, gets back on top of the bullish control zone, works its way above the momentum pool, then that was just a deviation out of this pattern and a fake out, and we can continue on our merry way potentially to $30,000. But as long as bulls have lost control and this pattern is in play, then pattern traders are going to be trading it to the downside. And wow, you can see this heavy push. So definitely my concept is, again, just kind of live trading here. I did post this into the group before making this video for a potential short trade, and this would be an epic trade, guys. Okay, if we do end up meeting the measured move, that would have been an epic trade of 9%. There's no guarantee that we're going to get down there, but you understand what these things could be on like 100 leverage, right? 100x leverage, 50x leverage, 20x leverage, right? Or even 5x leverage. I mean, such a move would be pretty epic, and even a partial move is already pretty good, right? Where a solid 1 to 2% does put food on the table with leverage. Guys, let's go ahead and just get away from this 4-hour chart because I think you understand what we're looking at. But before we leave, I will just mention that bears will be in control of the 4-hour if we do drop below 24,666. Okay, and by the way, that's actually 24,667, but 666 sounded a little bit more menacing. Guys, let's jump over to the daily. And here on the daily, you can see that it's not quite as menacing as the 4-hour might suggest. But of course, we do have some key levels at play around 25,865, where our volatility pivot will be. And we do want to be above that daily volatility pivot. That is going to, suggest our daily directional bias. And so we do want to be above 25,865 in order to continue pumping to the upside. And we will lose the bullish control zone on the daily at 26,500. So you can expect that if we do drop on the 4-hour, that we probably will interact with those price points and perhaps just bounce around a bit before making our way to this final destination. If we even make it there, because the daily bulls could just defend their territory and just swing it back around. Okay, so that's why understanding those levels are very important. Okay. So we can just round that out because there's basically 3 levels overlapping each other here, somewhere around 25,800 and let's just call it 65. There's another one at 25,765. So all of those, or that little zone there, could be a little bouncy area, and so could the bullish control zone if bulls choose to defend it at 26,500. Of course, we'll continue our daily momentum above 28,055, where our candles got stopped short. Bears don't gain control unless we're under 19,544. Basically the old chart, and I don't think that we're going to just drop all the way back there. But if we did, you can see there's lots of food for the bears on the way down with all these naked candles on the daily, just because of how heavily we have pushed up in a vertical way. We just have never come back to recheck these prices. And so, guys, don't feed the bears, okay? Like, you leave your picnic baskets on the table, and Yogi's going to come out and he's going to try to snack on them, okay? And so the bulls have to defend their picnic baskets, and the guys, otherwise the bears are going to get into control around that $20,000 level, right? Let's see here. Let's just move away from the daily and get to the meat and potatoes of the issue, which is the 5-day chart. Okay, now this is a bit more macro, and so you can see this big, giant candle here, just a naked and exposed, and also a partially naked one down here in that $18,000 area. Zooming out just to get a little bit more context of where we're at here. And you can see that really for the 5-day, we only have a couple candles that we're dealing with. Nevertheless, we can isolate a couple key price levels, which are going to be essential for us as this chart closes in 2 days. Why is 2 days important? Because that's going to be when Jerome Powell, that's going to be right before Jerome Powell gives the news on the interest rates, and it could be when the banking situation is the most shaky, right before then. And so what do we see here on the 5-day, and why is all of this from the 4-hour so relevant should we make our way down to 25,250? Well, it is where bulls will lose control on the 5-day chart. Okay. So in order for us to have just any type of chance to continue bullishly, we do have to hold that 25,250. Now, good news for the 5-day chart and going into Jerome Powell's meeting is that we do have our momentum pool down there. So multiple levels of momentum support for us to potentially bounce off of, and really this kind of like critical level support around 23,320-ish, 23,170-ish. We could get a final chance to just defend these levels down there, but the issue is that our volatility pivot is at 26,650, which is well above 25,250. So should that bearish scenario, that bearish pattern play out, and should bulls not be able to defend it on the daily the way that bulls failed to defend it on the 4-hour, then of course not only would the 5-day bulls be threatened, but they will have lost their volatility pivot, and that would give us a directional bias to the downside. And we don't want to have a directional bias to the downside going into the Federal Reserve uneasiness. The reason why I call it the volatility pivot, that's the name that I gave it, is because whenever we have a spike in volatility, if we're below that level, then the bias is strongly to the downside. When we're above that level, bias is stronger to the upside. And of course, going into a volatile week, it's really important which side of that line that you're on. Okay, and so absolutely, guys, for the next 2 days, our goal is to hold $26,650. Okay, so that we can give the 5-day chart and the 5-day bulls the best chance to defend this territory and potentially push us up to $30,000, if not more. Okay. Guys, I think that you do understand the risk that I'm talking about here. If we do lose this, we could come all the way down to those lower levels that we were looking at on the daily and on the 4-hour, right? So gonna just wrap that up there. I think probably let's just take a look at what happened on the weekly, because we did have a fairly nice week. This is what our weekly candle looked like. It just, just pure vertical goodness. And you can see that we are in an area where we could just get a little bit of retracement over the next week or so. And that would be perfectly normal, perfectly healthy. It's just that we would lose the chance to get that push on the 5-day. And so anytime we're going to lose any momentum on a time period, then it would just suggest that we would have the potential to build a little bit of toppiness, and then we would be at risk of weakness, and then this thing could flop over into a head and shoulders, right? Something like this with a measured move to the downside or something, and the run could be cut short. So that's why we want this retracement to be as shallow as possible, where like this one was very shallow. Even though this USDC thing was very scary, it still was only a pretty shallow retracement of this one, right? It's just that we had all gotten pretty greedy. And let's go ahead and take a look at our indicators to see how we're set up on the weekly, because just on a price action basis, we did have a higher low and a higher high. And so definitely this uptrend was continuing, and it just looks very beautiful on a weekly basis. If we get out our EMAs, you can see that we squeezed all the way above the 89 on the weekly, and currently we are just struggling to hold the 89. We could come all the way back down to the 50, which is where the next EMA is, and lo and behold, that's right at that $25,250 level, and yet we would still remain with the possibility of being bullish on the weekly. If I jump over to the 2-week, it's even more interesting, because you can see that we did get that squeeze on the 2-week, which did leave us, up here at, which did pump us all the way up here to the 50. And that pullback again would be to that kind of 89 on the 2-week there. And the monthly is very interesting, because we do have the possibility for a squeeze on the monthly, and that suggests that if we don't retrace too far, right, that we could, if bears don't take control of this chart, then holding this area, which could be a possible retracement, could just put in another squeeze candle, and then maybe the next month we pump up again. And so this pattern could take time should we have a significant pullback, but we still could be in a multi-month squeeze that could end up with some pretty epic levels. And maybe Bitcoin just needs to take a rest and go sideways for a while, and maybe bore some participants out of the market or something before it gets that next squeeze up. But I don't think that has to happen. Again, if we preserve the 5-day, then we could just preserve our momentum, and then we'd look at the next week setup. But again, going back to the week chart, we can take a look at some of our indicators, and I can show you that we did get a nice DI positive push with the ADX being quite bullish up here. Now, these are turning down as of the close of the week, but you can see that the positive aspect is pumping way more than the negative aspect, which is still turned down itself. So, relatively speaking, these are still in a strong position, even though it's having a pullback. And we could consider that maybe it's going to have another try. But being underneath the 50%, maybe it's just exhausted. And also we have a little bit of divergence here where price action was going to the upside, but we see the RSI on the ADX pointed to the downside. And so that could suggest perhaps, a deep pullback coming up, and just something to pay attention to. We do also have the MACD, which it did put in another bullish candle, which does look quite good. And if you look at the EMAs on the MACD, I mean, this, there's nothing wrong with this. It looks really healthy here, and I don't see anything too much to worry about on the MACD. So again, like the week closed very strong. We can look at the RSI, and we closed in the bullish control zone. It looks like we're just retesting our entry into the bullish control zone, and we're doing so after a drive of hidden bullish divergence has been confirmed. So I'm not ready to be bearish on the weekly. I'm just saying that the 4-hour and the 5-day could end up breaking us out of this stuff. There could be a chain reaction along with negative news in the market. So it's just something that we have to keep our eyes open to. Again, you guys know my thesis. I'm still bullish until something breaks. And then we take a look at the weekly jewel. And what we can see is that it is starting to get a curve back up. Nothing confirmed yet, so this could easily turn bearish. But it's just a little bit ambiguous, but at least we're getting a little bit of a curve up as opposed to this previous curve down. And so the weekly, again, has that bullish aspect to it. Some of these other indicators, let's see, like the Stokes, are a little bit more threatening in the sense that they are threatening to turn down, but currently they are still pointed up. So this is overheated, and we could be due for some type of a pullback. Just the RSI has a tendency, a mathematical necessity really to come all the way back down to the almost to zero area. And since we've been so over sold, essentially, that's going to happen eventually. It's just, do we get another couple pushes out of the chart or not? And currently the weekly is positioned to suggest that yes. And also we can see the volatility on this thing, and it is continuing to drive up. Now it could turn around at the middle of the chart. That's not uncommon, but at least it is positioned in such a way that it could continue to drive up. So I can't be bearish right now based upon the weekly. I can't be bearish right now based upon the daily. It's only that we have a hint of it from the 4-hour chart that something could go awry should we pull back too low, and that could derail the 5-day. And if the 5-day gets derailed, then of course that's going to have a chain reaction with the next week, and so that could just throw everything off. And so we really do want to be on the lookout for some type of bullish defense on the daily here in the next couple days, at least by Tuesday, if not Monday, because again, bulls have lost control on the 4-hour, and this pattern has a measured move for a breakdown to lower than the level that the 5-day chart needs to hold, okay, in order to have its volatility pivot met. Okay, so if we do have this pullback to 25,250-ish, or even anywhere close to that, then we better bounce above 26,650 before the end of the day on Tuesday, or at least before the news on Wednesday for the Federal Reserve. And so the daily bulls do have their work cut out for them. Guys, I hope you enjoyed this episode. Thank you for following. Please like and subscribe. Click the bell for those notifications. And that was your alpha for the day. Stay safe and happy trading.